Now, I thought for sure the very first video that I did in this new office would be an office tour. I was excited, I am excited to show you guys the new office, but sadly, all I've gotten done is that paint, which I'm very, very excited about. And the rest of the office is a disaster, so I am in no way, shape, or form ready to show you it all. Now today, super simple video, I'm gonna show you a loan repayment record keeper. Hey everyone, welcome back to Drawbridge Finance. My name is Levi Woods. This is an opinion channel only about money. I don't offer financial advice of any sort. And you can find me most days in the chat room because that's where I've been, like just trading and trading and trading, making money on the stock market. God, it's been a good year. But today we're gonna do something slightly different. We're gonna look at a loan repayment calculator, and it's kind of fun. It's kind of a fun little spreadsheet. It's got some cute little programming in it. So I'm gonna show you really simply how it works. Now, the idea with this particular spreadsheet is that if I was in the situation where I wanted to loan someone money and I wanted to charge them a simple interest rate, I would want to be able to keep track of it in a very simple way. And that's exactly what this does. So I'll show you, as always, we just fill in the white boxes. So the original loan amount here is grayed out. We don't touch that. What I'm going to put in here is an annual interest rate. Now, say 6%. That sounds about right. And what the spreadsheet is designed to do is calculate this out on a daily basis. So any interest that's charged will not incur additional interest on top of the interest. It's simple. So it just is the same interest day after day. What it's going to do is show how much interest is incurred since the last payment. So we can see the interest paid since the start date. Obviously I haven't put in the start date, so it's 0. The payments since the start date, 0. Let's get down into the actual chart and fill it out. Let's say we started a loan on January 1st. We just type that in, and we are going to loan someone $100,000. It sounds like a reasonable amount. At the top, we can see that if there was no payments made, the daily interest charge on $100,000 would be $16.44. The interest incurred since the last payment, which there wasn't any, so since January 1st, and the outstanding balance, if paid off today, would be the $100,000 originally borrowed, plus the interest of $1,545. The interesting thing about this is how the data works. So say I receive a payment from someone and they give me $300. You can see that it automatically calculates out the interest between the two dates. So it calculates that between January 1st and January 15th, there was $234 in interest. Then so the payment pays off this interest and it pays down a little bit of the loan balance. It's a pretty smart little chart. Then we can also see that the daily interest charge is now decreased because the loan value is decreased. So now let's just fill out a few more. January 31st, they decide to make a $500 payment. There was interest between January 15th and January 31st of $262, and the remainder goes to pay down the loan balance. Now, the great thing about this is, what if you've got somebody, maybe you've lent to a family friend, and they don't actually have the money to pay you back the whole amount all the time. So you can see, maybe they give you some money February 15th, and the interest incurred is $245, but they can only afford to pay you $200 in that particular cycle. So what that will do is it will keep this outstanding interest due to a low payment in this column, and this will add up over time. And what it will do is it means that the $200 paid off a portion of the interest, and the remainder gets held here, but it doesn't go into this loan amount because otherwise it would get charged interest on top of it. So now on February 20th, they come up with some more money from the $100 payment. $81 goes to interest. The remaining $19 goes towards this $45 that it's owing, and there's $27 owing left. Hasn't adjusted the total balance. And let's go to February 28th. At the end of the month, and they come up with some money, and they give $500, and this again starts to pay off the interest that's incurred between February 20th and February 28th, and then brings the outstanding interest down to 0 and pays off the remaining of the loan balance. So this loan balance will never ever increase. It will just continually go down, and any underpayments will actually just be recorded in this column here. Now that we've got a little bit of data, we can see that the interest paid since the start date has been $951. This is a sum of the entire column here. The payments since the start date, the total payments that they've made have been $1,600. And the interest that's incurred since the last payment has been $587, which is calculated off the basis that the last payment was made February 28th, and it's currently charging $16.33 daily interest. The outstanding balance if paid off today would be $99,939. Now, if you're interested in getting your own copy, these are available on my Etsy store, they're available in Apple Numbers, and they're available in Google Sheets, and you can download them once you've made your purchase. If you happen to be a member, thank you very much to all of my patrons. These are available, the spreadsheet's available during April of 2021, and you can just go to the digital download section because every month I release a new spreadsheet that's available to members only. Thank you so much for watching, and remember to click that like button down below because it helps my channel a ton. See you very soon. Let's get rich together.